Stocks trade firm with markets at record highs. Realty, auto and consumer durables are the big gainers while IT tracks.
Wipro appoints Srini Pallia as the CEO and Managing Director with immediate effect, replacing Thierry Delapart. In another sudden announcement, Bandhan Bank's founder and CEO Chandrasekhar Ghosh shares will step down in July.
Voltas rides a jump in AC sales and uptick in hiring boosts Info Edge. Strong volume growth powers Godrej Consumer. Likely big special dividend boosts Aster DM Healthcare. An agreement for repairs with the US Navy Boys Cochin Shipyard and promoters investing in Vodafone Idea Boys in the stars.
Gold scales to a new high of $23.50 per ounce following buying by People's Bank of China for the 17th month on the run. The yellow metal scales to near 71,000 rupees for 10 grams in India. Even as silver soars to over 81,000 rupees per kg.
Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Mangalam Malu. Well, we've started the week on a firm note. Yes, it is a truncated week because Thursday is a holiday, but nonetheless, it is a firm start. The momentum with which we closed Friday, or rather the entire week with, has continued into today. We had a good close in terms of the US markets as well, so that's really aided sentiment. So the Nifty currently is above its 2050 as well as its 100-day moving average, so no problems really coming in. And what stands out is the mid-cap index or the broader market outperformance or winning streak. Remember, last week it was up around 4% the mid-cap index. It gained for the 10th straight session, so it seems to be continuing in terms of momentum at this point in time. Big gains in specific stocks: IRB Infra, Info Edge, Aster DM, Gland Pharma, just to name a few. A lot more buzzing, for example, the real estate space, and obviously a lot of news focus.
Absolutely, Ekta. You know, it's up and away for the market. But what's interesting is that the Nifty Bank is facing some bit of resistance near its previous all-time high. The previous all-time high for the Nifty Bank is 48,636 and the high today was 48,630. So just within 6 points of a fresh record high, the Nifty Bank faces some bit of consolidation. Nothing really to worry. The frontline indices are doing well, and all things realty and auto in particular. So the real estate index up around 2.5%. The auto space doing extremely well as well. The top Nifty gainer today is Eicher Motors with a gain of nearly 6.5%, surging away. We had, the Federation of Automobile Dealers in the morning on our channel saying that the next year look extremely strong, in particular for two-wheelers and SUVs, three-wheelers as well. Maruti Suzuki doing extremely well, as is Mahindra & Mahindra. We're also seeing a lot of these auto ancillaries spike in trade. And the biggest gainer in the most recent, move that we've seen right now is Exide, up nearly 12%, with big positions being added on the long side in index futures as well. So a lot of stock-specific action. Just see whether the Nifty Bank goes ahead and crosses past a fresh record high in the second half of today's trading session.
Okay, well, yes, mid-cap index had a fresh record high, so that momentum is intact. But let's talk about specific stocks, and it's a news-heavy day today. Shares of Bandhan Bank are under pressure. This is after news of Chandrasekhar Ghosh stepping down as the bank's MD and CEO when his term ends on July 9th. In fact, we did speak to Mr. Ghosh earlier today on his surprise decision, the rationale and more. Listen into excerpts from that conversation.
And 2015, I opened the bank, and up to 2018, if you see that the 3 years, and these are the 3 years, I have been developed the bank and keep that people's trust on the bank to deposit, attract to the depositor. 22-23, I recovered more or less in the 70% up, 80%, but not in my satisfaction has come on that achievement. 23-24, I have been seeing that the very fantastic way has been come as a business momentum. Slippage has controlled. 2015, I opened the bank, and up to 2018, if you see that the 3 years, and these are the 3 years, I have been developed the bank and keep that people's trust on the bank to deposit, attract to the depositor. 22-23, I recovered more or less in the 70% up, 80%, but not in my satisfaction has come on that achievement. 23-24, I have been seeing that the very fantastic way has been come as a business momentum. Slippage has controlled.
It was a weekend of resignations. We got one from Bandhan Bank and the other one was IT major Wipro announces the resignation of CEO Thierry Delaporte, and he will be replaced by a Wipro veteran and insider Srini Palya. Rima joins in with the details of all of this surprise move, and what next? Rima.
Thanks so much for that. So in a surprise move, Wipro has announced the resignation of CEO Thierry Delaporte with effect from 6th of April 2024. He will be replaced by Wipro veteran and insider Srinivas Palya as the new CEO and MD of the company, effective immediately. That said, Thierry will stay on till the 31st of May to ensure a smooth transition, but he will step down before his 5-year term officially ends in July of 2025, which means close to about 14 months forward. Now, the question is, who is Srinivas Palya? He is a Wipro veteran and an insider. He's been with the company since 1992, and in his tenure, he's held many leadership positions, including that of the president of Wipro's consumer business unit, the global head of business application services, and most recently, he was the CEO of the Americas region, which contributes about 31% of its overall revenue. It's the largest geographic unit for Wipro. So that's Srinivas Palya for you. Now, what's the street view? Well, the street has taken note of the fact that Wipro this time has opted for an internal candidate versus the previous two being external candidates. Abid Ali Nemuchwala came from TCS in theory. Delaporte was also an external candidate. And as Nomura puts it, being an insider gives him a head start compared to what external candidate would have had. So in that sense, perhaps it is a bit of a positive. But the company has had a fair amount of CEO churn, and the company struggled under many of the CEOs. So the street is going to watch for any change in strategy under the new CEO. It's unlikely we're going to have clarity on it anytime soon, but it's going to be an important watch point, and the recovery is likely to be gradual. That said, any new CEO's job on hand will remain the same. One is revive growth. Now, Wipro's growth rate has faltered that of the peers for a while now. These are the FY23 numbers. Even in FY24, in the first 3 quarters, the company has reported negative revenue growth. And therefore, revival, getting back to industry growth rates is going to be important. And revival of the Capco business, which Thierry had bought in his tenure for nearly $1.5 billion, will also be very crucial. And thirdly, stem the attrition. The company has seen a series of high-profile exits. This list is not comprehensive, but the recent ones, Jatin Dalal, the CFO, the Chief Growth Officer, Stephanie Trotman, these were all high-level exits. Now, all eyes will be on Wipro as it reports its numbers later this month and what the strategy under the new CEO will be. Back to you.
Okay, all right, Rima. Yes, that's the big story in terms of the churn that's taking place at Wipro. But let's move over now. Voltas is in focus. It surged over 8% following their Q4 FY24 business update. Vimakshi is here with all of the details and what's doing well for Voltas.
Well, it's a strong update that is doing well for Voltas. The company in its 4th quarter reported a significant growth of almost 72% in volume terms for their AC segment. Now, keep in mind that quarter 4 is generally a seasonally strong quarter for the company. In fact, for the entire year, the sales of almost 2 million AC units is what the company has recorded, which is the highest ever, not only for the company, but across all brands in India. As a result, volume growth at for FY24 stood at 35%, and this performance, as per the company, was largely driven by good demand, strong omni-channel distribution, as well as new launches. Apart from that, Voltas Beko, the home appliances brand, also saw a good uptick in terms of volumes, up nearly 52% in the 4th quarter. It also managed to achieve close to nearly 2 million sales of home appliances in FY24, and in fact the company is now gearing up to further expand its distribution network. Now, we also saw that there was a recent channel check that was conducted by Prabhudas Leeladhar, and there was some fierce competition in this particular segment, and brands despite that have managed to take a price hike, which roughly indicates that there may be some comfort coming in from the demand. In fact, Voltas too had reported a nearly 2 to 3% hike. Despite that, the company, according to the channel check, is likely gaining the most market share after Daikin. So a positive out there for Voltas as well. But to sum it up, a good update that has come through for Voltas, and that is the reason why the stock is perched at an all-time high today.
All right, the stock at an all-time high. That's about Voltas. Thank you, Vamakshi, for that. Before we step into a short break, just pull up the intraday chart of United Breweries and United Spirits as the temperatures rise. It's not only ACs that people are buying. People are buying a lot of these coolers as well from the beverage space, the alco-bev space. United Breweries has moved higher. Alongside that, we've seen an up move on United Spirits too. Take a short break, come back, focus on a lot of these other stocks which are moving around right in a short while.
Welcome back. Well, definitely a buzzing market in today's trading session. Just want to point out one particular stock. Gland Pharma is in focus. They have received a US FDA approval for a particular cancer drug, erbuline mesylate injection. And that is basically used to treat breast cancer, which is spread to the other parts of the body. The market size is around $92 million. But the reason you're seeing the stock higher by around 6% is because the Gland Pharma is expected to be the first company to get generic approval for this particular drug in the US market. Company expects to launch it in the near term via marketing partners. So it is probably going to have a limited amount of competition when it sells this particular drug in the US markets. That's the reason why you're seeing the stock higher by around 6%. So good going for that particular one. Otherwise, it is turning out to be a very good market in terms of specific stocks, and that's reflected in the advanced decline ratio as well, which is largely on the advancing side at this point in time, but you need to monitor it because it's not that wide in terms of a ratio. So as you can see that, the gap will probably narrow a little bit as we go on in case the mid-cap index, gives up a little bit of gains. But let's move on now. Our colleague Ritu Singh caught up with Dinesh Khara, the chairman of SBI, and spoke to him on what he makes of the recent RBI policy and the outlook for the bank going forward. She began by asking him on the outlook for net interest margins.
I think hopefully we should be in a position to maintain NIMs at the current level, because that's my broad assessment is, of course, we have to deliberate in our ALCO, but my broad assessment is that we should be in a position to maintain the NIMs at the current level.
Mr. Khara, on the LCR framework, which the governor mentioned in the policy, they've proposed some modifications to the liquidity coverage ratio framework to facilitate some better management of liquidity risk by banks. What did you make of it? What could have prompted this? And what are your expectations from this draft circular that will come up?
Actually, what used to happen because of the payment systems efficiency and RTGS, NEFT, etc. made available 24/7, 365. So the system was required to keep the excess liquidity because there were, RTGS and NEFT can hit at any point of time, during the weekdays and as well as on the weekend also. So just to ensure that no bank is left out with some debit balance, all banks were required to keep some excess liquidity, which was, my assessment is that it was as high as to the extent of about 50,000 crore. So now, virtue of the readjustment arrangement possible 24/7, and that is something the banks should be in a position to monitor it on a real-time basis, and which will actually unlock that excess liquidity which was required to be kept. So I think it will ensure even better and more efficient liquidity management.
The governor in the policy said that the prospects of investment activity are looking bright. And he listed whether it is private capex cycle, government capital expenditure, healthy balance sheets, or capacity utilization improving. It looks good from a macro point of view. Give us a sense of what you're seeing on the ground as the largest banker. Is the corporate investment cycle picking up, and what's in the pipeline for SBI?
We do see the investment cycle picking up, and pipeline, of course, I have not taken stock in the recent past, but yes, of course, the last number which I recall, it was very strong at about 5 trillion and odd, 4.5 to 5 trillion odd. So I think that is, and I think it would have only, we would have disbursed some, and we would have got some new proposals also. So I actually get to see very positive responses from the corporates. They are evaluating all possible investment opportunities, and they are committing on ground also. So this, I would say that, which we have been seeing for quite some time. People used to debate, discuss, and now I think it is in the last leg where people have started investing because there was enough cash in the balance sheets of the corporate. So as far as their equity contribution is concerned, it was very visible. So now they have started approaching for the leverage, and also they have started availing also. So which actually augurs very well.
What would that translate to? I mean, last year, for instance, you had guided us for FY24 that you'd have a credit growth of 14 to 16%. What does the coming year look like on the back of this pickup in corporate activity that you just told us about, and what you're aspiring to, and what the industry could also see?
I think we would have. I'm sure the results are sometime away for us, but as far as the last year's guidance was concerned, we have my sense is that we would be beating those estimates. And based upon this and the kind of a positive environment which we are seeing now, my expectation is that in the year 24-25, we should even get to see even better numbers. And I invariably say that, the real growth rate plus another 2 to 3 basis points is something which we expect to grow. So my sense is that we should be having a GDP growth of about almost around 8% in the year 24-25. Inflation being at about 4.5. So say about 12.5 plus about. So around 15% plus is something which I expect. But I always say that I believe in under-promising and over-delivering.
Well, and we've seen that happen, Mr. Kara. But, let me quickly touch upon the retail loan side as well, because, again, the RBI governor and the policy seem to indicate that rural demand is also catching up. Urban consumption is buoyant. What are the trends that you're seeing shaping there, and what would retail loan growth for SBI look like in FY25?
I think it would be more in sync with the last quarter, or maybe it will be even better than the last quarter. But yes, of course, the trends are more like what we have seen in the last quarters.
Okay. Any number you could guide us to, what sort of contribution you're expecting from?
I'm under, it will not be in order for me at this point of time to give you any kind of a number.
Okay.
But maybe we are declaring our results on 9th of May. We'll talk about that on.
Yes, we'll have more questions for you then. But, on the deposit side, from the initial numbers that banks have already released for the fourth quarter, the deposit momentum seems to be picking back up a little bit. CASA ratios have also improved sequentially for several banks. In the current liquidity environment, what are you seeing? What's your sense?
See, it is not merely the growth, but one should look at the cost at which the growth is happening. So, growth is possible, but at what price? And while in the banking system, we have to be very mindful in terms of the cost also. The cost also and the yield on the book. So it's not merely the growth, but the quality of that growth number is very important.
Right, interesting conversation coming in from the management of SBI, speaking about deposit growth and loan growth going forward as well, not just the quantum of growth, but the quality of growth, which is extremely important. No taking away from the markets. Now, the Nifty Bank seems to have picked up some pace, up around 111 points. The Sensex has hit a record high, the Nifty at a fresh record high as well. So the Nifty Bank at the high point. Good time to get in some trading strategies. Ruchi Jain of 5paisa.com will join in after this short break. Look at Interglobe Aviation. All the travel stocks doing extremely well, starting with the car stocks, but Interglobe Aviation, the stock has surged to the high point of trade. Given company at the day's high is IRCTC as well. So ahead of summer, if you're planning your travels, it's either train or by flight. Both of them likely to be expensive given the sort of traffic that we're witnessing in terms of travel. And that's also being reflected in the kind of occupancy and average room rate numbers that we're seeing in hotel companies. So Indian Hotels too was in the red for most part of today's trading session, has recovered from the lows and has currently moved to the high point of trade as well. So that's about Indian Hotels, IRCTC, Interglobe Aviation, all the travel and related stocks. But no taking away from the way the market has moved around as well. Nearly 22,650 on the Nifty at a record high. The Nifty has been led higher by the auto stocks today. So the auto index is up 2%, even as the Nifty is up just about 0.5%. And this despite the absence of an up move coming in from the Nifty Bank. The Nifty Bank is up by just about 0.25%. And the PSU banks are lower by about 0.6%. And this is at an index level. Some of the top gainers on the Nifty, all of them auto stocks, Eicher Motors, Maruti Suzuki and M&M. With the up move that the Nifty has seen over the last couple of trading sessions, the range on the Nifty has moved higher. Remember earlier we were talking about the 22,300 to 22,550 range on the index. That has moved higher, and now as we speak, the 22,600 put writers and the 22,600 call writers, both of them are extremely active. There's premium of 64 rupees available at the 22,600 put, and the 22,600 call has a premium of a little over 125, so 130. Add both of them together, you get about 200 rupees if you are writing that straddle. But the range has moved higher by about 150 rupees to 22,450 at the lower level for the Nifty and 22,750 at the upper level, even as the index is at a record high. What brings it some sort of ceiling on the way up? It is the Nifty Bank, which is about 30 points away from a fresh record high. Let's see whether it does go ahead, hit that and then sustain above those levels, because HDFC Bank, that stock is absolutely flat. In terms of other stocks, big long positions being added on X side after that 12% up move that we're seeing. A lot of long positions being added on names like InfoEdge and Voltas as well. But as that happens, just keep an eye out on two stocks. One, Piramal Enterprises may enter F&O ban in the next couple of trading sessions, if not today. And Hindustan Copper may exit F&O ban. So that's another stock that you should keep on your radar.
Okay, all right. Well, that's what's taking place in the entire F&O setup. Just wanted to point out, since you were talking about so many Nifty stocks, Apollo Hospitals is under pressure today. So that stock is down around 1.6%. We do understand that there will be some kind of hearing, with regards to the standardization of rates, which is going to take place on the 10th of April, which is day after on Wednesday. So maybe there is some amount of apprehension ahead of that. So that stock is lower, down around 1.6% for Apollo Hospitals. But in any case, we have Ruchit Jain joining in to discuss the technicals of the market. Ruchit, hi, welcome to the show. It's a lively market for us this Monday. How would you approach it?
Yes, hi, very good afternoon, Ekta, very good afternoon, Manglam. Well, there's no doubt about the trend that markets are trading at its all-time high, so the broader trend remains positive. Now, the question is still, where can this momentum extend? Because at all-time high, we usually take retracements of the previous corrections to make a guess that where would the next resistance is coming. So recently we witnessed a correction of about 800 points in the Nifty. And if we look at retracements, 127% retracement of that correction is coming around 22,750, and 161% retracement would come around 23,050. So I think until we see any important supports getting breached, the markets would slowly and gradually move higher towards these retracements levels, where one can expect 22,750 immediately. And from a short-term perspective, even 23,000, 23,050 would be expected. So the only thing is that the revised stop loss method, I think, is working quite well. Support base has been shifted to around 22,400 to 22,300 range. So till these levels are intact, better to ride this trend.
Right, ride this trend. What individual stocks are you looking to ride this trend?
Well, a couple of buy recommendations. First is a buy call in the Helvete, Larsen and Toubro. So recently we had witnessed a breakout form and cup and handle pattern, which is a bullish pattern on L&T's daily chart. Last week we witnessed some pullback move, but not any kind of volume-based sell-off has been seen in this pullback. So I think this again gives a good opportunity to enter into the stock over here. So from a short-term perspective, one can go long on L&T with stock below 3680 for potential targets around 4,000. And insurance space is looking quite positive. ICICI Prudential Life Insurance within this entire sector has been showing relative outperformance. On the weekly and the monthly charts, a breakout has been seen from previous resistance. So ICICI Prudential Life would be my second pick to go long over here, with stop loss below 600 for potential targets around 690 to 700.
Is there anything you like in the real estate pack? I mean, all the stocks are doing well in today's trading session, and the one which has moved to the high point now is Godrej Properties, up around 6.5%, open flattish. The updates that have come in from the entire space have been pretty strong as well.
Yeah, so the trend is quite positive for entire realty basket as well. The only thing is that the stocks have already rallied, not only on today's update. If you look at last 1 or 2 weeks in this correction, the stock had formed a low of around 2,100 rupees. From 2,100 to it's already up by 2,650. So I think if any existing long positions are there, then they should continue to hold. But for fresh buying, the stop losses are quite deep. So better we keep a buy on dip approach, where in case if we see any kind of declines in the near future, then on dips one should look for fresh buying in stocks such as Godrej Properties.
Just quickly before we let you go, Aster DM.
So even here, if you see, then the trend looks positive over here. In fact, not only today, if you look at last 2 or 3 trading sessions, this price move has been supported by good volumes compared to its average. And it can rally towards 440, 450, which is the 161.8% retracement of the recent corrections. So here also, I think the structure looks quite positive. Potential of around 540, 550 kind of levels in the near term is there.
All right. Thank you, Ruchit, for joining in and giving us all those views on individual stocks as well as the index. We step into a short break. As we do that, let's get into some market opinion coming from Sandeep Bhatia of Macquarie as well. Let's hear him out and we'll be back.
Welcome back. Well, for the markets, it's steady as she goes, so no problems coming in. So let's talk about a couple of companies which have come out with their Q4 FY24 updates. Sadaf Saeed, who is the CEO of Muthoot Microfinance, now joins in to discuss the quarter gone by and what FY25 might be looking like in their limited capacity, considering that it is a silent period. Mr. Saeed, thank you very much for taking the time out. Well, overall, it's been a good quarter because FY24 dispersals have been up over 30% year on year. Your assets under management have grown over 30% on a year-on-year basis as well. So the statistics are looking good. But if you had to just start by talking about the tenure of your book in Q4, has it risen as compared to a year ago?
Good afternoon, Nikta. Thank you for having me here. I think the numbers are generally looking very good. If you look at our asset under management, it has grown by 32% from 9,208 crores to 12,194 crores. And incrementally, our loan ticket size have grown only by around 10%. But the growth that is coming in is largely coming in by expansion of our distribution network. So in the last financial year, we have added around 336 branches, which takes our total branch network to around 1,508 branches. And our expansion has also reached to now 19 states. So we have added Telangana as the latest state, which is there. Our portfolio remains a 2-year kind of a loan. Almost 97% of our book is 2-year loan, but incrementally, we are disbursing 3-year loan tenor also. So around 31,000 loans which we have disbursed last year are 3-year tenor. And this is coming as a strategic kind of a shift from our side. We are borrowing also long term. We have just recently raised ECB of $75 million, which is around 622 crores at a very fine rate. And that money is available for us from 3 years and 3 months. So that is allowing us to have a longer tenor loans, and it is allowing us to diversify our sources of fund away from banks. We are able to access new set of investors who are willing to give us money. So overall, the year was very good for us. The asset under management grew, the branch network grew, the client base has grown to now 33 lakhs 50,000, which was around 27 lakhs last financial year. And with more acquisition of customer, we are able to take the digitization also forward. So for the last whole financial year, we were at around 20% digital collection. The digital collection for the whole financial year FY24 has reached to 26%, which is a 30% jump. And incrementally, if you look at, we are collecting almost 30% of our collection month on month on digital format. So that is also helping us.
All right, perfect. Sadaf, always a pleasure speaking with you. The last year was good. Let's talk about the next year then. What's your outlook on dispersal and AUM growth for the next year? Does this 30% plus sort of growth continue? And to add to that, if you could give us a sense of the incremental cost of funds as well. You've locked in funds at an attractive rate from the ECB for a long period of time. So what are your NIMs likely to be around that 12.5% mark? And as we speak, digital, you said, is close to 24%, rather 26% of your business. You had a target of 30%. When does that happen?
Yeah, thanks, Mangalam. Likewise, it's always a pleasure speaking to you. I think on all the fronts, if you look at in terms of our NIMs are at around 12.7%, and our growth has been steady. In fact, when we had gone public, we were at around 34% CAGR growth for the last 3 years. It is now at around 39% CAGR if you look at the last 3 years. The current financial year growth is 32%. Of course, denominator has an impact, but we feel that around 30% growth we can easily continue to maintain. And the growth is coming, as I said, is from customer acquisition, distribution network, and use of technology. In terms of digital collection, so incrementally we are already at 30% collection month on month. So if you look at March collection, it was already 30% digital collection. But if you look at average for the whole year, it is around 26%, which was earlier 20%. So there's a 30% improvement on the digital collection. And I think in terms of our robustness of NIMs, it will continue to improve as our portfolio that we have originated post the liberalization of the regulation, it is at a higher yield, and we are able to raise funds at a much cheaper rate. So our cost of funds have come down by 10 bips in the last financial year. And incrementally, the cost of fund is much lesser. It is around 10.4%. And we feel that we can easily maintain this 12.75%, 12.7% of NIM and continue to report a good amount of ROA and ROE that we have projected earlier.
Okay, all right. That's interesting because you've indicated that your cost of funds have come down by 10 basis points. You expect it to be maintained at these levels and your net interest margins as well. Just quickly then, in terms of the stress in the book, there was some chinks in the armor in the quarter gone by in your asset quality. Do you expect it to probably increase post-elections? What's your reading generally during an election year? And how are you viewing your asset quality right now?
So if you look at our asset quality, our collection efficiency has remained robust. It's at 98.4% on-time repayment. It is actually an improvement of 2.6% over the last financial year. At the same period, we were at 95.8. So it has improved over the period of time in this financial year. And overall, I think if you look at NPA also, it's pretty stable. We don't anticipate any increase in NPAs. The portfolio quality will remain very good. In fact, the loans that we have originated post-COVID are performing really well. Our credit costs are going down as compared to the last financial year where we had around 3% credit cost in FY23. It will come down significantly. It will be almost half of that in terms of credit costs.
All right, Sadaf, thank you so much for joining in. Although you're from a microfinance institution, you've come in at a good time for the market because as we speak, the Nifty Bank has hit a record high. The Nifty Bank, we were talking about how it was facing some sort of supply at record high levels. Now it's gone past that. 48,650 is where it is. The earlier level was 48,636. Before breaking this, the Nifty Bank had seen some supply at 48,630 within 6 points from a fresh record high. And now it's gone past that level itself, making it just about 2.5% away from the record or, an important milestone of 50,000 on the Nifty Bank. Big move coming in on Axis Bank, and that's the one that has led the Nifty Bank higher. And what makes this one even more special in today's trading session is the absence of contribution coming in from HDFC Bank. So if you pull up the contribution chart of the Nifty Bank today, you'll see not much coming in from the PSU banks. The PSU bank index is actually lower and not much coming in from HDFC Bank as well. So it's a couple of these corporate-facing banks like ICICI and Axis which have moved higher and contributed to the Nifty Bank, and these have been underperformers. So let's see whether this sustains and makes it a fresh move for the Nifty Bank itself, coming in from these underperforming banks earlier. But for now, for the record books, today has been a red letter day because the Nifty, the Sensex, the Nifty Bank and the mid-cap index, all of them have hit record highs.
Yes, absolutely. No complaining. So maybe inching towards that 23,000 mark for the Nifty as well, aided by the strength that we are seeing for the mid-cap index as well as for the Bank Nifty. In terms of gains for the Bank Nifty, Axis Bank, ICICI Bank, IndusInd, Kotak, all of these stocks are managing to hold up well. The likes of PNB, Bandhan as well as HDFC Bank sulking. But nonetheless, let's talk about a couple of other movers today. We've been talking about how lively a market it is. Exide is in focus. Hyundai Motor and Kia Corp have signed an accord with Exide Energy Solutions. Sonia is here to tell us how this is impacting Exide, where the stock is up in double digits right now.
Well, thanks a lot for that. So this is a big move for Exide, up almost about 14% right now. Just to give you the news, Hyundai and Kia have signed an agreement with Exide Energy Solutions, which is a wholly owned subsidiary of Exide. Now, this agreement is for electric vehicle battery manufacturing in India. So what Hyundai and Kia are planning to do is for improving their localization of manufacturing of products, they are now boosting their battery localization for their electric vehicles in India. Now, they will have a specific focus on lithium iron phosphate cells, and this is aimed at expanding the battery development, production, supply and partnerships in the India market, and hence generating products which are cheaper and more affordable for the India market through localization of ancillaries. Now, this is a big positive surprise for Exide because this opens up a big market for battery manufacturing of global passenger vehicle companies in the Indian market. Now, earlier the view was that OEMs would do all the cell manufacturing in-house, but now with Hyundai and Kia signing an agreement with Exide Energy, it just opens up the path for more OEMs coming in to the Indian market and tying up with players like Exide. In fact, Elara Capital has a positive view on Exide. They say that this is a big positive surprise and they expect the multiples to get re-rated upwards. But I just want to point out that if you map the chart of Exide in the last 1 year, the stock has already doubled, perhaps in anticipation of a lot of these demand pushes that are coming in from the EV space. So, better to just keep that in mind. But for now, of course, this is a big positive development for Exide. Back to you.
A big positive development indeed, and the stock is up around 15% as we speak. That's about Exide. With that, we'll step into a short break, but a lot happening in the markets. We'll get you all of that and a lot of individual stock-specific action as well. At the bottom of your screen, there is some telecom data that has come in for Feb as well. It's the same story. Reliance Jio continues to add subscribers, remains the market leader. There is some consolidation for Bharti Airtel as well. Adds subscribers, not as much as Reliance, but Vodafone continues to lose as well. With the promoter fund infusion coming in on Vodafone, can it manage to drum up some more subscribers or not? Is something that we will monitor going forward. But a lot of these real estate stocks, they're all in focus today. A roundup of all the action coming in from this space for the fourth quarter updates. Sonal joins in. Sonal.
Well, there's a lot of news other than the fourth quarter updates as well. So let me start with that first up because Godrej Properties, that stock is higher because the company in a press release indicated that they've been able to sell 1,050 homes worth 3,000 crore rupees in their project Godrej Zenith in Gurugram, and this is in last 3 days itself. It is the most successful ever launch in terms of value and volume for the company. Additionally, they say that they have seen a growth of 473% on a YY basis in their Gurugram market in FY24. And in specific project details, in Q4, they've been able to sell inventory of their new project of around 2,690 crore rupees, which is the Kandvali project in Mumbai. Signature Global is the other one I'm watching out for because the company has been able to exceed FY24 guidance in terms of collections and pre-sales as per their quarterly update. So their pre-sales in Q4 is up 240%, volumes are up 111% and collections are up 71% as well. The FY24 pre-sales, they are up 112%, volumes are up 42%, collections up 62%, but there's a mild increase in debt, which is because of higher land acquisition that the company saw in the year gone by. Keystone is the other one I'm watching out for. A decent set in terms of operational update. Growth both on a quarter-on-quarter and on a YY basis, barring collections which were down on a YY basis. But pre-sales up 37%, collections up 48%, volumes up 3%. The company has been able to launch 2 projects with gross development value of 735 crore rupees in Q4 and 3,000 crore rupees in FY24. Additionally, the business development has been strong with 4 projects added with a gross development value of around 3,000 crore rupees. Lastly, talking about India Bulls Boots Real Estate. We've been talking about that big fundraise. They have raised funds via preferential issue to the tune of 3,911 crore rupees. Some marquee names here. Embassy Group has increased their stake after this. Their total fundraise via them has been 1160 crore rupees. Bailey Gifford has been around 209 crore rupees. Blackstone has infused 1235 crore rupees here. Other investors around 1243 crore rupees, which includes the likes of Quant Active Fund, there's Poonawalla Finance, Microlabs, Maybank, Utpal Sheth and Capri Global as well. This is about the fundraise. The company has also announced asset acquisitions to the tune of 1853 crore rupees. This is all in cash. But yes, a lot of developments at India Boots Real Estate.
A lot of developments indeed. Sona, thanks a lot for that. Let's talk about some other updates coming in from the consumer space. We have Godrej Consumer, consolidated organic sales growth of mid-single digit and volume growth on an organic basis of high single digit is something that the street likes, and that stock's holding up in the green. Margins for them continue to expand year on year, and this is despite increased media investments. The company had guided for increased ads as a percentage of their overall sales, continuing to back their brands. And the India organic business delivered high single-digit volume growth. Add to that, the Park Avenue and Kamasutra acquisitions would make the underlying volume growth in double digits in a sector which is parched for growth. This is good news. And Goodnight Agarbatti launch was also well received by customers. This, in an otherwise weak category and seasonal category of household insecticides, this is a launch that will take away share from the unorganized space and do well for the company as well. Indonesia, which is the second highest geography for them after India, has reported double-digit volume and sales growth as well. So that's continuing to do well. And the Africa business, while it is expected to post good growth on a constant currency basis, reported number would be double-digit decline, largely because of the sharp depreciation that we saw in the Nigerian currency in the start of this year itself. But the street will focus on reported double-digit volume growth and margin expansion, and that explains why the stock is higher by about 2.5%. The other one, which is surging as we speak and is at the high point of trade, is Nykaa, because a good fourth quarter update coming in for them as well. Gross merchandise value up by early 30s in terms of a percentage growth year on year. Net sales value and revenue growth for the company will be high 20s, so assuming between 27 to 29% for that particular metric as well. And it's been led higher by both their key verticals, beauty and personal care. That's grown in mid-20s, well ahead of the industry as per the company's release. And fashion as well, which is a growth and margin driver for the company, has seen net sales grow in mid-20s on a year-on-year basis. The other smaller verticals, which is Nykaa Man as well as their eB2B business, which is reported as others in Nykaa's overall business, has seen a net sales growth of over 80%. So putting this, a strong show for Nykaa across all their businesses in the top line. Let's see what the profitability does. But at the current reckoning, the street likes this growth and the stock up 7%.
Okay, all right. So that's on the entire FMCG space. But I'm looking at the hospital space. So Aster DM is one stock which is actually fired up today. Aster DM, the board is going to be meeting on the 12th of April. They are going to be considering that interim dividend for FY24 and declaration of a special dividend. Now remember that this is on account of the segregation and the sale of the Gulf business. April 23rd, Tuesday, will be the record date for the interim dividend as well as the special dividend. So if your name is there on the 23rd of April, then you would be eligible for both these dividends. Now, just to give you a background in terms of the news, the consortium of investors, which was led by PE firm Fadger Capital, acquired 65% in Aster GCC, which is the Gulf business, for $1.01 billion, around 8,400 odd crores. The promoter family retained 35% of the Gulf business along with management and operational control. So what you have now in the listed entity is just the India business. The company has, however, indicated clearly in their presentation a dividend distribution of around 110 to 120 rupees per share to the shareholders of the company. So that's the range which is expected. Now we have clarity on when it's possibly expected. They will retain the remaining transaction proceeds to pursue growth opportunities and to keep it as reserves. So that's the update coming in. That's the reason why the stock is excited, up 6.5%. But let's shift focus to a CNBC TV18 exclusive. Global Research Bank of America has raised its year-end target for the S&P 500 index to 5,400 from 5,000 earlier. We spoke to Savita Subramaniam, who is the head equity strategy, USA Bank of America, to discuss the recovery going ahead for the S&P 500 and India's performance in comparison to the US. Listen in.
Our view is we're in for a broader recovery higher highs on the S&P, but not necessarily from just tech, but other companies. So rates, I think, are manageable for most companies in the S&P 500. And, think about it. Tech companies have net cash in many cases. So they're actually making money in this environment. I think 12 to 24 months out, we start to see the productivity gains of companies like Bank of America or other service companies using AI to become more labor light. I think it's fintech, it's legal, it's IT services, and we've already seen this transform certain industries. If you look at the US, the white collar jobs are maybe more at risk, but within the kind of broader American spectrum, what we're seeing is this reshoring boom. So, we've had since 2018, we've seen companies move property, plants, and equipment out of other regions of the world, mostly China, back to the US. I mean, one of the things that we looked at was, what is the level of real rates that will really destroy the economy? And I don't think that we're there yet. I mean, in fact, in the 80s and 90s, we had higher real rates than where we are today. Yeah. And the market was doing well. Companies were focused on efficiency. So if we move back to that type of environment, I think that it could be still a very strong environment for equities, for the economy, et cetera. I do think that the demographic layout in India is much more attractive than in the US. In the US, one of the reasons that the labor market is so tight is that we have this aging population and these early retirees during COVID. So the demographic story is stronger here. And then I think the consumer trends in India are very exciting.
All right, 15% up move on Exide is what we're seeing, but Eveready is not too far behind. In fact, Eveready, as we speak, is up 9%. I'll be interested to see, if Amara Raja is showing any sort of move or not. But all these battery companies doing extremely well. Take a short break, come back. We have all things commodities. Manisha Gupta joins in with Nirav Bhanshali, who is a member of GJEPC, which is Gems and Jewelry Export Promotion Council. Stay tuned.
Welcome back, and joining us on the show now is Nirav Bhansali. He's member at Gem and Jewelry Export Promotion Council. Nirav, hi, thank you so much for joining us. And let's start with gold, because that one is trading at an all-time highs at a time that we are looking at various exhibitions and meetings and shows happening across the country. What is the impact that we've seen of the all-time high gold prices on all of these events?
Gold prices are moving up substantially like this, how it has moved in the past 10 days. Has a short-term effect, but it's like very few days till the price stabilizes. Once it's stable at even 72,000, I think the demand is very strong. And right now we are in a very sweet spot.
Nirav, what would you say about the first quarter 2024 trends? Because we do know that Feb wasn't such a great month. March was a complete washout as we've been looking at very high gold prices.
IIJS is the foremost platform for jewelry business in India. It almost provides platform for 150,000 crore plus worth of business for gold, diamonds, and all other commodities, platinum, silver, color stones, everything. Diamond last year was very difficult. We are starting from a very low base, but America ended on a very high note. India demand was always strong last year as well as now. And so hopefully diamonds will outshine gold this year. The price movement in gold this year, in this last 1 month, 1.5 months, has been startling. So I think it should be good for both gold and diamond. 2024 should be one of the best years that the industry will see, I think.
All right. So gold and diamond both will do better. But what is your sense on the export numbers? Because domestic is slightly on the weaker side. Is exports picking up as well? I mean, as you said, the base is on the lower side. Is that helping the industry?
So like I said, we are starting on a low base. Last year was a bad year for diamonds. Gold did reasonably okay. So this year we will see substantial growth over the last year numbers. And overall demand is picking up everywhere. Mind you that there are a lot of elections happening this year all over the world. But even after that, we are seeing strong sentiments towards jewelry in most of the major markets, barring China.
Nirav, also, what's your sense on the gold price view? I mean, I'm assuming that is a conversation all of you within the industry would be having on an everyday basis.
Yeah, so every day that you cover gold, the gold price moves up. So I think if you keep covering gold, gold is not going to stop going up. But jokes apart, it's been surprising for everybody. This kind of move was never anticipated. But the demand is still strong, and I still expect the gold to go up further. We might end up at 75,000, somewhere around that,
All right.
at the end of the year.
Okay, we are trading at almost 72,000. 75,000 is where you're anticipating it to be. But it's interesting, as you say, that even as the gold prices are at all-time highs, the demand really hasn't gone down. Well, that actually can be seen within the industry. Nirav, there are more store expansions, bigger brand ambassadors, more IPOs coming in this space.
If you look at the next 10 years, India is an amazing growth story. And jewelry sector in India is even a more amazing growth story. There are so many stores opening. I think every year, more than 2,000 new stores are coming up. Industry is getting organized. Organized players are expanding at a very fast pace. A lot of different financing options are there. So private equity, like we saw, Carrot Lane deal, Bluestone deal. A lot of public interest in Kalyan, Senco, and a lot more companies will take this route to grow their businesses. So I think it's a very interesting space for investors as well as for the industry. Next few years, India and jewelry is an amazing growth story.
Nirav, I got stuck after you said that more than 2,000 organized stores is what we are looking for India to be opening up. It's something that we would witness. I mean, that's a huge number given the fact that retail sale is not so strong and the gold price is at all-time highs. But clearly, industry clearly seems to be celebrating and the expectation going forward quite strong. Nirav, thank you so much for joining us. And with that, that's all the time that we have on Halftime Report. Business Lunch will take all the action forward.